And we are on. And we are filling up fast. Okay, we've just gone over 200.
Come to Papa. All right, Ian is the moderator today, so when he tells me that we're filled up, then we can get going. We'll just give it a couple of minutes so everyone can get in. I can see people are still piling in.
Yeah, they are. They are coming in thick and fast. They might break Zoom.
I hope not. That would be awful. Yeah, so for those who are asking how things are for me, let me show you some. I had both my hips cut out and replaced titanium hips 2 weeks ago. And yeah, so it's pretty significant kind of an operation. And yeah, just coming back to normal now, I guess. Yeah, it hurt like a motherfucker. No, I drastically underestimated how much pain would be involved.
Okay, Scott, I'd say by the time you shared your screen and got things in order, we'll be good to go.
All right, so let me share my screen and let's get after it. Okay.
Okay, just before you start talking, Scott, can we just get in the chat, can you let us know if you can hear Scott loud and clear?
Can you hear everything? File presents.
Okay, fantastic.
All right. Today's presentation is on how to earn a recession-proof $500 to $2,000 a day from a crypto side hustle. And it's a crypto side hustle that works even in a bear market in stocks, or a bear market in crypto, like we're in now. And as I said, very recession-proof. It's not a bot. It's not a trading robot. Most of these don't work. And the ones that do work, they actually take a lot more time than this to execute. This thing only takes you 6 minutes a day. It's no bot you can run on 6 minutes a day. It's not about getting lucky with like 1000x Moonboy coin that nobody knows about. It's not mining. It's not yield farming or any crazy high interest staking scheme. And we've seen all that yield farming stuff is completely unraveling at the moment. You never want to touch any of that. And most importantly, it works when the market's going up, it works when the market's going down, it works when the market's crashing, and It works when the market's going sideways, and it works especially if you hate crypto, and it even works if you think crypto's a scam and you hate all the people involved in it and you hate everything about it. It takes just 6 minutes a day, probably takes about 2 weeks to learn, and you can expect to practice about a month or two before you're any good. And today, one of the things I want to point out is that I'm not going to use cherry-picked examples. We're going to use the real-time data from today, from the charts right now today, the funding rate from now today in real time, because I want you to see that we're in the middle of the worst crypto crash in history, and I want you to see that it still works, or if it still works, and we're just going to do it for real instead of pretending to be a thing. We're just going to do it for real and let the chips fall where they may. So you don't need to know anything about blockchain. You don't need to know anything about encryption or how crypto works. You don't need to have trading experience. And that's really important. Some of our best traders have no experience because there's a lot of stuff to unlearn when you're a trader. It does help to know a bit about, trading, but you don't need to spend all day in front of the screens, and you don't need to have multiple screens. I do everything from a laptop, and 6 minutes per day is enough. And you especially don't need, and I recommend you don't, carry a mobile phone or a laptop with you while you're out. I don't want you checking real-time prices. It's just annoying. That's something that you don't want as part of your life. You don't need to do any fundamental analysis of coins, and you don't need to hodl, which is buy and hold. It works great when the market's crashing. And let me show you some results that our members have gotten during the last month. So this is our real results. These aren't hypothetical or backtest results. So where are we now? We're at we're at 27 times our risk for the month. So if you risk $1,000 per trade, you'd be up $27,000. And our win rate hasn't even been really that great. It's only been 45%. Because of the way that we do it, which you'll understand shortly. It's very, very smooth and consistent. And these are the real numbers over the last month. It was 24,000 when I wrote this, but it's $27,000 as of now, because those results are real time, and you'll get those. So you can audit everything that I'm claiming. Every single trade is completely auditable. You can check, was it real? Was it legit? I know there's a bunch of our community on this call. So anytime I say something that's bullshitty or stretching the truth or anything like that, please call me out in the chat. I just don't do stuff like that. So this period that we looked at here was this red box for Bitcoin. And if you look at what Bitcoin did, it dropped from 45,000 down to 20,000. It was the worst crash in history. And even in the worst crash in history, we're up pretty substantially for the month. And we got to address the elephant in the room. And the elephant in the room is what the fuck's happening with the economy. And really, it's the Fed. So the Federal Reserve, they've got thousands of economists, and they cost billions of dollars a year. And until recently, they were just going full on with this stimulus, full on with quantitative easing, full on with stimulus. They had their foot mashed on the economy's gas pedal with trillions of dollars in stimulus. As recently as March, they're doing quantitative easing. And in April, they said that inflation is transitory and nothing to be worried about, which every single one of you would know that that's complete bullshit, that prices are going up like that, because these old fucks, like, they live in a bubble. It's been decades since they filled up their own car or bought their own groceries. They don't notice what every single one of us notice, that prices, that wages, that rents, that gas, that food prices, they're spiraling out of control, that you can't get staff, that wages are going up, that, everything that everyone already knows is that shit's getting more expensive. These guys are like, nah. And they first noticed this less than a month ago. And now that they noticed it too late, they feel they have to slow the economy, and that the odds of a soft landing are reduced. And that's asshole speak for, we're going to intentionally send this economy into a recession. And they're going to do that because real estate prices are going up too fast, because, because used cars cost more than new cars in some instances now, because food prices are out of control, because gas is over $5 a litre, $5 a gallon. And recession is coming. That's why we can't have nice things. And so these geriatric motherfuckers who choose how the economy is going to go, they do it the same way every fucking time. As long as I've been doing this, the 15 years that I've been doing this, they drive our economy as fast as they can. They make it grow as fast as they can. And then they hit the brakes way after it's way too late, after the car already crashes. And they keep doing this. And in the 15 years that I've been doing this, most bubbles and most recessions have been caused by the Fed just not noticing, not doing their damn job until the economy is red hot and then intentionally crashing. And so these are you can see every time the Fed raises rates, these gray bits are recessions. So the Fed raises rates, we get a recession. The Fed raises rates, we get a recession. The Fed raises rates, we got a little mini recession. And now the Fed's raising rates. You don't have to be Sherlock fucking Holmes to figure it out that we've got a recession coming. It's on the cards. You need to plan for it. And the stuff that worked investing wise in a boom time does not work in a recession. So you got to ask yourself, how are you going to protect yourself from what's coming? And what if you had a recession-proof way to make a consistent side hustle income? That's what I'm going to show you today. So what if $7 a gallon gas didn't bother you? And what if you could pay your credit cards down during a recession and be absolutely recession-proof? So what is it? This is a trading system. And a system is a set of simple rules that you follow every day. And they cover every single aspect of what you're going to do. There's absolutely no thinking involved. They are extremely easy and simple. And it's not day trading, which is incredibly hard, and I'd never recommend it, and most people lose money doing it. There's no subjective decisions to make, no skill and no judgment involved. And you follow these simple rules like a robot or like a monkey. And that's what I do. And everyone gets the same results. All of our community get exactly the same results as me. I don't do any better than the other people because I'm somehow smarter than others. I don't do any worse. We all get the same money. And once you know the simple rules, you have a reliable and repeatable way of earning money forever. So what is it? It's 6 minutes a day of work, and you can do that at any time. You pick your own 6 minutes, and you make between $500 and $2,000 per day. It's reliable and consistent in all market types, in booms, in busts, in sideways. And there's just a mountain of real world evidence and peer-reviewed academic papers and all kinds of stuff I'm going to show you today, showing its reliability over years and years. And it's going to take a few weeks to learn, and there's no subjective decisions at all. You just follow the rules. And it's not a sales pitch in the conventional sense, because you know what I hate? I hate turning up to one of these and you think you're going to learn something and you get an hour of fluff talk and hype where you learn absolutely nothing, and then you get an elaborate sales pitch. And I just refuse to do that. Like, my marketing guys tell me I'd probably make more money if I do it that way, but I hate it. I'm not going to do it. I just won't do it. So what I'll do is I'll give you the whole thing for free. I'm going to teach the whole thing with absolutely nothing held back in exhaustive detail. I'll answer every question. I'll give you every bit of documentation, written rules, video examples, everything you need. Enough that you can trade this every bit as well as me without paying a cent, every tiny little part. And I'll give you the written rules to download and take away too at the end. And of course, I've got something to sell at the end. Like I don't want to lie about that. And that something is time. And if you want my help, if you decide that this is for you, I'm going to show you the whole thing and you can decide if it's going to be for you. I'd be thrilled to work with you, and I can turn you into me. So I've done exactly what you're trying to do, and I can make certain that you hit your trading goals about 10 times faster than you could by yourself. And it's much, much easier if you do it in a community of people who are also doing exactly the same thing. And it's much easier not to lose confidence when you see there's 100 other people getting exactly the same results that you're going to get. And it's not something that you take on faith. It's just something that we all churn out money every single day. And that's what we do. We're these money getting motherfuckers, and you can join our community of money getting motherfuckers. But honestly, you don't need to. You don't need to do that at all. You don't need to pay me a little cent. You pay attention today, put in a little work. You got everything you need, absolutely everything. Now, I want you to understand the deep principles underpinning the system, not just the rules. So that's the most valuable thing you can take away today. Please turn off your phones and shut down your Facebook, your Insta, anything that might distract you. We've got a lot to cover. I want to go really fast. We've got a lot to get through. So I'd really appreciate that. So who am I? I am a professional trader with a highly unusual story. And most of you know this because I don't hide it. And Google is not my friend, by the way. I was a career criminal. I was a drug dealer, I was a pornographer, I was a loan shark, I was an armed robber. I've got 33 violent felony convictions and a bunch of drug trafficking convictions. So I'm not your usual finance guy. And I was in and out of jail many times my whole adult life. From when I was 17 until I was 31, there wasn't one single day that I wasn't in prison, out on bail, waiting to go to prison or on parole after prison. And I decided I was sick of that life. I was sick of life. And I decided to turn my life around and become someone I could actually be proud of. And trading is how I did that. And it was a very, very difficult road to hoe for someone with my background. And I've been a professional trader for 15 years. I'm a pretty good trader. Everyone who's traded alongside me knows that. But what I'm really good at, what I am actually world class at, is designing trading systems. And that's my zone of genius. And that's what I want to share with you today. It's the best system that I've ever designed. I've been designing trading systems for a long time, and it's a cracker. So conventional wisdom is that the big money from crypto is from holding a coin for a few years. And, it's going to go up, it's going to go down, and then one day it's going to moon, and you're going to luckily sell out at the perfect time. Like Dogecoin, like Shiba Inu, like Sand, like a bunch of others you can name. And I've done that a few times. Like, it's possible. Like, it's actually true. But emotionally, it's very, very difficult. And you have to hold potentially through 90% drawdowns or more, like we're in right now. And conventional wisdom is that you can't earn a consistent day-to-day, week-to-week income from crypto. And that you have to endure these feast-famine cycles like we're going through now and hope for the best. And the truth is that no matter how good you are, no matter how good your coin is, if the market goes down, your coin is going down with it too. And I want to just illustrate a little embarrassing thing for me. My highest conviction slam dunk play of all time, I've got a massive amount of money in this, is a coin called Woo. I think it's a brilliant proposition, and I think it's a great company, and I think it's a great coin. And I bought it at 59 cents. I bought more at $1, and when it broke out to $1.30 at all-time highs, I bought even more. And today it's trading at 14 cents, which makes me look pretty stupid. So I bought here, I bought more here, and I bought more here, close to the top. And look at it swirling down the drain. And now we're all the way down here. If it happened to me, it can happen to you too. And I'm going to show you how to earn an incredibly stable income from crypto without any of the usual drawbacks of day trading. And those usual drawbacks are pretty much the same no matter what style of trading you're doing. So I don't want you to do any sitting in front of the screen all day. I want you to place your orders, and those orders will have a stop loss, which automatically gets you out of the trade if it's a loser, and a target, which automatically gets you out of the trade if it's a winner. So you place your orders, and you either have a winner or a loser, and you come back later in the day and you check. I don't want you spending 10 years learning how to predict market direction. I don't want you predicting market direction at all. That's a fool's game. I don't want you to have any sort of subjective decisions to make, which look really easy in retrospect, but on the hard right edge of the chart in real time, those are really hard. I want everything to be black and white so you don't have to think, you don't have to turn your brain on. And I don't want you holding overnight so you aren't subject to crashes, which often happen overnight. So we take 2 trades a day. So most people will take will buy a coin and hold it with a time horizon of several months to several years. Instead of that, we're taking trades where you can profit if the market goes up or if the market goes down. And what this means is taking 2 trades a day at a time that suits you. You place them and walk away. You live your life. You don't carry prices with you on your phone, and you don't check charts. And I'll do it in front of you today, but it takes me about 6 minutes. So the trades typically last for about half a day, but you won't be around to watch. You set your trades, you walk away, you come back the next day to check. We're going to do it together in a few minutes, but it's going to take an average of about 6 minutes, sometimes more, sometimes less. And you make money when the market goes up, whether it goes down or whether it goes sideways. So I want you to think of this like gambling, but not as the casino customer, as the casino owner. So, you know, the casino owner is not sitting there in the eye in the sky going, holy shit, Scott's walking in, fuck, he looks like he's on a hot streak. Oh, no, he's doubling down. Like, it's just not like that. They just know that the longer I spend at the tables, the more certain it is that I'm going to lose. And that's the way that I want you to frame this, because that's exactly how it works. So you take a trade with a stop loss and a target. If your trade loses, you can't ever lose more than a set amount. And most of us trade with set amounts between $200 and $1,000. Probably 85% of it is around that. And we start off small and we work up to those amounts. And if you trade wins, you make double what you stood to lose. So you risk $500 to make $1,000. You risk $100 to make $200. You risk $1,000 to make $2,000. And that's all it is. It's a strong edge in the market. In the long term, we have a 55% chance of doubling your money. And you do this twice a day. And it's very, very battle tested. It's not some kind of hypothetical system that I produced up as some kind of simulation and showed that it might work. This is a better, more robust version of what we've been trading for years and years and years with FX. We've got hundreds of people to expert and beyond expert level. We've got a real world track record now. It's 2,300 auditable and verifiable trades. There's a large community of people earning their living from it right now. And you know, let's just look at the last week of trading. When I built this presentation, it's actually not the last week, but the last week was about the same. So we took 8 winners and 7 losers, and it doesn't sound great, right? Like, it sounds like crappy trading. 8 winners, 7 losers. You're not that good. And I risk $1,000 per trade. That's all I risk. I don't want to try and make millions out of this. This is a side hustle for me. My 8 winners made me $16,000 because I made $2,000 for every winner. My 7 losers cost me $7,000. So I had $9,000 in profit, less than brokerage fees. It was like 8,890 or something like that. So anyway, so I made more or less $9,000 in profit from a very average week where I wasn't predicting the market particularly well, wasn't even trying. So that's pretty much the way it goes down. And with this system, average results give you really big profits, and you get it right half the time, and you win really big. Why? Because you bet $1,000 and you make $2,000 if you win. It's like, if you just think of it like red or black on the roulette wheel, except instead of paying 1 to 1, it pays 2 to 1. It's just a solid edge. And so we've only been trading this system for crypto in 2022, but we've got 3 years experience trading in FX. And this is from October 2019. And the markets were very quiet in October 2019. And then coronavirus hit, and it was still very, very steady. And then coronavirus crashed the market, still very steady. And then the market rallied super strongly with all the stimulus money, and still very steady. And then the market crashed recently when they turned off the stimulus tap and raised interest rates, and it's still very, very, very steady. So this has been what it's done in FX. We've got a huge amount of real world evidence that through the COVID crash, through the stimulus boom, through the inflation crash, this system has been steady and consistent, and it works no matter what. Our biggest peak to valley drawdown was 11.5% through that whole 2,300 trades. This is something I'm very proud of. This is holy grail kind of numbers. So how do I make it better for crypto? And it is much better. It's like 338% better, apples for apples. So one of the most powerful edges in finance is this thing called positive carry. And we're going to get into it in detail, but this is one of the most important hedge fund edges, and investment banks and hedge funds. There's like literally $3 trillion worth of money trading this edge. And this bloke liked it so much, he bought this boat with his positive carry, and he named it Positive Carry. So what we're doing here is combining the carry trade, which is a very well-known and very well-documented powerful edge in the real finance world, with our proven price action system, the edge is so strong that we could remove many rules from the system. And by removing many rules from the system, we made it much easier to trade. So for the very first time, I'm confident letting beginners trade this because it's really simple now. We made it more robust and we made it more reliable because by removing rules from the system, there's less things to go wrong. And let's have a look at today's funding rate data, which is how we calculate the carry trade. And let's just take a look. So crypto futures work, and you don't need to know this, but crypto futures work slightly different than real world futures. They don't expire after a certain amount of time. They are what's called perpetual. So there needs to be a balancing mechanism. If the funding rate is negative, you have to pay an interest rate called the carry trade to go short. If the funding rate is positive, you have to pay an interest rate called the carry trade to go long. So when this is red, we have a bullish edge. When this gets too green, we have a bearish edge. So if we follow along, it flipped a little bit red, and you can see the market went up for a little bit. And then it flipped a little bit green and the market went down. Flipped a little bit red, the market goes up. Gets too green and the market just went down a bit here. Flipped too green and the market went down a bit. And then we turned red, so we've got a little bullish edge and it just went up a little bit, not too much. Now it's green again and it goes down. Now it's green again and the market crashes. It goes red and the market goes up. That's a very small reading, so it did nothing. It gets too green and it crashes again. It gets red and the market goes up. You can see how it goes red and the market goes up. It goes too green and the market starts crashing again. And now it goes red. And you can see when it gets really extreme red, the market rallies a little bit. Gets extreme red and the market rallies a little bit. So this is not perfect. Markets don't work the way that like you know what's going to happen. This is just like a tilting of the roulette wheel in your favor. So so in the chat now, does everyone understand this? Because this is kind of important to understand that the funding rate, the carry trade, it's not a perfect predictor. It's just a little bit. All right, most people have got it. All right. Okay, so let's move on. Okay, so what I figured out is that when I took my already successful FX system, I applied it to crypto, and I separated the results into positive carry, where you get paid to take the trade, and negative carry. This is what the result was like. So the win percentage was way higher, and the expectancy per trade, all of the profit came from the positive carry trades, and the negative carry trades didn't lose money, but they didn't make any money either. So what I figured out is you could just kill all these negative carry trades and drastically improve the edge of the system. You would get all the profit while taking only 44% of the trades. And that was the theory that we started with, and we tested that theory over a large amount of data, and it held solid, and it's held solid in the real world, and it's a very, very powerful thing, and it's the easy way to invest. And this is not day trading like you've ever heard of it before, and some of you might have had bad experiences day trading before, right? And that's almost certainly because you're given a lot of choices, freedom, and decision about how to trade. And when you're given choices, freedom, and decision, it gets very, very confusing. It looks easy, but it's really hard. And we call this discretionary trading, and it's a shit thing to do. It's incredibly stressful. It's incredibly difficult. It's so easy to make mistakes. It's a recipe for disaster unless you've been doing this for like 10 or 20 years. And it's one of the things I absolutely hate is it's the hardest type of trading. It's the sort of trading that experts like George Soros do. and they teach it to beginners and tell them like you're not fucking George Soros, man, and you're not Druckenmiller and you're not Buffett, you're not any of those guys. Like, so, and they've been doing it their whole lives. Don't try and trade that way. So what we're doing is a totally different and superior method. I am very evangelical about systematic trading. Systematic trading is where you have a simple set of rules which you follow like a monkey. We all follow the same rules, and these rules must cover everything. They must tell you which coin do you trade. They must tell you when do you buy, where to place your stop loss or get out if you're wrong, and when to take profits. They've got to cover every single aspect and box you in, leave you with no choices. Now, for most of us, having no choices feels like you're being told what to do. So we can get this sort of childish, you can't tell me what to do kind of attitude. But really, once you settle in with it and you realize the great freedom from not having to think about this, not having to care whether the market's going up or down, not having to read the news, not having to follow the Federal Reserve, not having to check what announcements are coming out today or understand the fundamentals of the coins. Without any of that stuff, you've taken out every single thing that's hard about trading, and all you're left is the no thinking required part. And low IQ people are very, very welcome to do this. I'm a pretty smart dude, and I would say that my intelligence is a kind of a handicap for this. The people who do best with this system are the people, in my experience, who are smart enough to understand trading and no smarter than that. So we're talking about if you're just above average intelligence, this is right in your wheelhouse. If you are a super genius, if you are like 170 IQ guy, this may not be for you. So it's 100% mechanical rule system. And why is that significant? Well, it means that if you follow the strict black and white rules, you're going to get precisely the same result as me and the same result as everyone else in our community. And you don't have to be some Picasso painter. It's house painting. It's not fine art. That's what it is. You can be just a ham-fisted, nearsighted house painter. And you can actually be better than me at this. And you don't need any technical analysis. For those of you who know what that is, you don't need to have any chart reading skills. There's no subjective decisions about chart patterns, no trend lines, no head and shoulders, no forecasts, no picking coins, no narratives, no guessing overall market decision. No, I like this coin. No, I hate that setup. Nothing to learn. And so what we do is we take all this expert stuff out of trading and throw it the hell away. And it's perfectly possible for a beginner to be just as good as me with around 2 months of practice. And all my community know this is true. There's 5 or 10 guys who are at least my level at FX. I'm not the best trader in my own community by any stretch of the world. The one that comes to mind is Sheria, who's just so much better than me. It's embarrassing. And he was better than me within like 2 or 3 months. So I don't know about you, but I found absolutely numberless ways to fuck myself over while investing. And the only way I've ever found to unfuck myself is to have a set of trading rules and stick to them. And we call that a system. I want you to do your job, clock off, do something more interesting, slide down the brontosaurus like Fred Flintstone and clock off. Now, one thing I want to point out is that if you have a crypto portfolio, if you're a long-term hodler, you're taking it right in the ass today. And I have a long-term crypto portfolio as well. It's taken it right in the ass. But I have found it emotionally very easy to stay the course. I've had a great week. I've had a hell of a good time. Even while I'm physically in pain, even while my crypto portfolio is getting decimated, because I'm stacking cash every day while the market is going down. There's just something about oh, wow. I mean, I might have lost more than that in my crypto portfolio, but I'm just steadily earning $1,000 a day. It just takes the sting out of it, And there's a really famous trader. I'm not going to name drop him because that's kind of a douche bro thing to do. He runs one of the most famous hedge funds in the world. He paid $10K to learn this privately from me. He trades it at $3,000 per trade. So I traded $1,000 per trade. He trades at $3,000 per trade, but he's worth hundreds of millions of dollars. It doesn't scale up much beyond that. At $3,000 a trade, he just does it because he likes trading. And, this guy is, COO of Sequoia Capital, which is, one of the biggest hedge funds in Silicon Valley, Clarion Capital Management, Peter Thiel's hedge fund, president, PayPal, vice president, PayPal, vice president, bank. Like, he's like a serious cat, right? Like, he's a very, very famous trader. And he trades this just like us, slightly bigger, but not like super big. And in the long term, this system's made profit 70.6% of trading days. Now, the thing that I'd like to point out to you is these are the winning days and these are the losing days. You can see the things that point out to you are obviously there's more winning days than losing days, which is what we want, because this is for income. This is not trying to make capital thing. And you can see this is negative 5%. We've got very few negative 5% days, like one or two there, but we've got lots of 5% winning days. So we've got fewer, and our average losing day is around here, and our average winning day is obviously much bigger. So we've got three things going on here. We've got more winning days than losing days. Our average losing day is way smaller than our average winning day, and our worst losing days are not as bad and not as frequent as our best winning days. It's exactly what you want to see. So this system really saved my ass at the time. This was the first system I designed just for safe and consistent income. And we're not trying to make millions of dollars here. What we're trying to make is what I needed at the time, which was a salary. I wanted a system that didn't rely on having amazing skill and total concentration. I wanted simple and clear rules with no wiggle room and no discretion. And I didn't want to make money if I was trading well, and I didn't want to lose money if I was trading bad. And this was 10 years of watching my account go up and down and up and down and up and down. I just wanted a quiet, boring old man trader life. And this makes it perfect for a side hustle. And you don't want to be a world-class trader. I don't want to be a world-class trader, and I'm not. I'm a good trader. You just follow the rules in 6 minutes a day. It's very, very boring, but it prints money on autopilot. Now, how does it work? What is it? We have a mechanical set of rules on 15-minute charts, and I'll explain this in a moment. And we're taking 2 trades per day for an average of a few hours each. You don't hold for more than one day, and you don't try and catch a big move, and you never, ever try and swing for a big win. You're not holding that coin that goes from 1 cent to $100. It's not our game. And you don't screen watch, and you place your trades and walk away. You don't have live prices on your phone. And you trade both long and short. So you're equally willing to bet that the market goes down as going up, and there's no bias, there's no opinions, and there's just the simple purity of the system rules, and you follow it and you profit. So if you have a crypto portfolio, or if you use my other crypto system, the combination of steady income with upside potential is amazing. And you can wait out crypto winter, which we're in now, while earning a steady income. This is the last year of crypto. It's gone up, it's gone down, it's gone up. Looked like it was really, a year really looked like we were going to get $200,000 plus per Bitcoin. And we didn't. We just didn't. The Federal Reserve raised rates, crashed the market, crashed the whole thing. We're going into recession. Shit changed. What do you do when shit changes? You can wait out the crypto winter while earning a steady income. So let's get started. So you can use any charting package or website, but I prefer tradingview.com. It's what I use. And the free version of tradingview.com, they have a paid one, which is like $20 a month, but the free one's perfectly adequate for our needs. So in the chat now, can someone post a complete instructional on how to set up charts and use the primary indicator that we'll be using today, which is the Bollinger Band? So these are all available on every single charting package or broker or crypto exchange. But what we have here is on the left-hand side of the screen, we want a 15-minute chart. This is where we're taking our trades. On the right-hand side of the chart, we want a 30-minute and a 60-minute. So we want 15-minute, 30-minute, and 60-minute, and we want this band. This band is called the Bollinger Band, and what a Bollinger Band is a band that holds 2 standard deviations of the price. 2 standard deviations of the price should be 95% of the time should be within those. And we're betting on mean reversion within these 2 bands. That's essentially what we're doing. So the next step is choosing which coin to trade and whether to bet that it goes up which we call long, or bet that it goes down, which we call short. And so for most people, this is really an incredibly confusing decision. Like, is it going to go up? Is it going to go down? And which coin do I buy? Like, fuck. Like, the combination of that is incredibly confusing, but not for us. So here's how we do it. So we go back to that perpetual funding rate, and we make a list of the strongest perpetual funding rates. There's a bunch of different ways to do it. I'm going to show you like 3 now. We're going to start down the list until we have 2 trades. So can I get someone in the chat to post a spreadsheet, which the spreadsheet which populates the funding rate data? And so let's look at the spreadsheet which populates the funding rate data. My gift to you, have a copy of this. So what we do is we load this, which I'll just load it now, and it goes to the broker, pulls all of the funding rate data, and we scroll down this list, taking, these are the strongest long trade edges, and these are the strongest short trade edges. And we just go down the list in order until we have 2 trades, and then we stop. That's what we do. Now, you can use my spreadsheet, which I recommend, which is my gift to you. Well, let me show you how to manually do it. So one way to do it is to go to your broker, and they always post the funding rate. So this is ftx.com/funding rate, which is the broker that I use. Now you can see it's printing these funding rates, and I can click on download. It'll download CSV, and I can import that into a spreadsheet and sort it. That's one way of doing it. Another way of doing it is to go to coinglass.com, click on funding rate, choose your own broker, and sort. So I'm clicking on FTX, which is my broker, and I'm sorting in order, and I'm saying this is the strongest bullish edge, this is the second strongest, this is the third strongest, this is the fourth strongest. Or if I want the bearish edges, this is the strongest bearish edge. CEL, I'm not surprised because it's Celsius network, which is going broke today, the very strongest bearish edge. Green Satoshi token, very strongest bearish edge. It's a bucket. Yeah, those who know about it will know that it's a terrible thing. Yeah, that's how it works. So we're just going down this list until we get 2 trades. A bigger number is a stronger edge, and that's what we're doing. So we start at the top of the list, we work our way down until we have 2 trades. Why just 2? Why not 4? Why not 6? Because every trade that you enter into at the same time is implicitly correlated. And what you're going to find is if you took 6 trades at once, then probably you're going to get 6 winners or 6 losers. You think you're taking 6 different trades, but they're really probably going to behave very similarly. So we don't want to fool ourselves that way. So 2 is about right. So what do we do then? So we then increase the accuracy of these trades by waiting until we get a price action set up called a retest. And I didn't invent retests. They're known by a whole bunch of different names. Almost every serious trader uses one version of them. And I like my version of them because there's no subjective squinting at the chart and like trying to decide if there's some sort of weird chart formation there. The rules are very black and white. And this makes it far easier. Now, I want you to understand the principles behind it first. So an uptrend works like this. You nearly always see uptrends look like this. It's not because they're magic. It's because as the price starts going up, people notice that it's going up and they think, fuck, it's going up. If I buy that, it'll keep going up. Wow, wow, wow. And they get more excited and they buy more. And when something starts going up, people stop selling it. Why? Because we're monkeys and we keep the things we love and we sell the things we hate. And we love things that are going up because they're making us money. They're making us feel good. I'm feeling smart. I'm so smart. I'm so smart. I'm so smart. And then when people have made a certain amount of money, they're like, wow, I just made 10 grand. Maybe I should bank some profit. And when they start banking profit together, it starts going down. And then there reaches a point where those guys on the sideline who are watching this and they're jealous as fuck. They're like, oh, fuck. Why didn't I get some of that? Why wasn't I in Dogecoin when it went from 1 cent to 70 cents? Why aren't I that lucky? And then the thing comes down and it's now, well, now's my time. like this thing is on sale. It's on sale at a discount, and now's my time. And so people, just exactly the same way as people will buy a set of sneakers that are on sale, they will buy a stock or a coin in an uptrend when it's on sale. And then it starts to go up and the cycle repeats. It's going up and people sell less of it because it's going up and they love it and they love it. And they make so much money they can't help themselves and they start banking profit. And then it's on sale again. And so this is the psychology underpinning this whole thing. You don't need to understand that, but I like knowing. So you don't want to bet against this because this is a self-reinforcing cycle. So when is it safe to bet against the trend? So at this point, the bulls are expecting another leg up, and another leg up is actually the highest probability. When the bulls get something other than what they were expecting at this yellow line, as soon as it crosses the yellow line, the bulls have to admit, hey, I was wrong. It's not doing this stair step upwards, it's doing the elevator down. And this is the point that our trading rules get us in on. This is what we're trying to accomplish. So you don't need to understand this fully, and it's really impossible, especially for non-traders, to get this right at the start. Do not worry about this at all. I've got a bunch of materials with all the written rules of this and a bunch of examples. It's going to make it really clear. Just 20 minutes at home studying this, and you'll figure it out. I just wanted those who are experienced traders to understand the principles behind the rules. And these rules identify the point where one side or the other side has to admit they're wrong. So once you know you have a potential trade, you look for the price action setup, which I'll teach you right now. And let's do this on real-time prices. And don't worry about memorizing this. Someone's going to post the written rules in the chat, please. Okay, so the setup that we're looking for has three elements. Element one is a touch of the Bollinger Band. You can see this is the Bollinger Band. We touched the Bollinger Band. Element two, so let's look at it right here. Element one. Element two is a higher close without breaking the low of the Bollinger Band touch, which is right here. You can see this has happened in the same bar. So we've got element one, a touch of the Bollinger Band, element two, a higher close. Now, our third element is a lower close. Lower than what? Lower than the bar before. So we have element one, element two, element three. Our setup is complete. At this point, we place an order to go long here if price touches that bar with a stop loss here. Now, if at any point during this process, it breaks the low of that Bollinger Touch, we just start the count again. So here we have a Bollinger Touch and then it breaks the low. So we start the count again. Breaks the low. So we start the count again. Breaks the low. So we start the count again. Breaks the low. So we start the count again. And the low here, you can see up on that L up here, is 2793.4. So this is the low. Here we have a higher close without breaking the low of this bar. You can see the low here is, oh no, sorry, my bad. We did break the low. So we have, this is the Bollinger Touch. This is the higher close. This is the lower close. We place an order to go long here. Now that order is not always filled. If that order is not filled by the end of the bar, we move it down to the high of the next bar. So now we're going long with a stop loss here. Where is our target? Our target is twice the distance from the entry to the stop loss away. So roughly, here is our target. And so what we're doing is we get long here. If it comes down to here, we're automatically chucked out of the trade and we take a loss. We're going to size that trade that we know how much we're going to lose. And I'll show you how to do this in a little while. But for me, when I lose, I want to lose $1,000. But usually when we start people learning, we start them learning on $20 a trade. And you would be absolutely astonished the strong feelings that you can get and the amount of learning you can get from risking $20 a trade. It's almost exactly the same as risking $1,000 a trade. And where do we get out? We get out when we've got double what we risked. So if I risked $1,000, I want to get out with 2,000. If I risk 20, I want to get out with 40. Okay, so let's look at that example again. We touched the Bollinger, element 1, element 2, higher close, element 3, lower close, setup complete. We place our order to go long here. It's never filled, so we move it down to the next bar. Now, let's look at the same thing in reverse. We have a touch of the upper Bollinger. We need one or more lower closes, and we have 1, 2, 3, 4 lower closes. So we have element 2 complete from here to here. We are waiting on a higher close, which we get here. We now bet that the market goes down if it breaks the low of this bar, which it does. How far is our target? Somewhere way down here. And you can see that it eventually will hit it like way down there. Is everyone following this so far? I'm going to do some more examples, but is everyone following this so far? So there's a good question. Checking these charts takes time, doesn't it? Once you've done it a little bit, like these things stand out from space. Like I can just look and go, okay, long setup, short setup, long setup, short setup, long setup, long setup. You know, they're very obvious. Okay, let's look at a couple more. Okay. The next one. So you can see we're looking at the Bitcoin price today. We're not like cherry picking some, we're not cherry picking some sort of data. Thank you for posting that in. The funding rate criteria, yes, it is. It's broker specific. Yes, it does. There's a video on how to set up your Bollinger Bands on TradingView. Let me just show you how though. So you click on this button that says indicators. You search for Bollinger Band. Click on that, and then you click on the settings bar for Bollinger Band. It's got this thing called a basis, which is a middle line. We don't want that, and we just want the upper or lower. And the inputs are the defaults: 20 period, 2 standard deviations. So I just use all the defaults. As far as limiting it to a day, we don't limit it today. You just leave it run. Like it may run longer than a day, but it's very rare. Like this is not the type of thing where you're holding for like 3 or 4 days. So basically, once you're in a trade, you let it run. Okay, so let's look at another example. Here we have a touch of the Bollinger. We break the low of that Bollinger immediately. So the thing restarts. We break the low of this bar immediately. So now we have a Bollinger Touch, element 1, and we have a higher close, element 2. We're waiting on a lower close, element 3. We have a lower close. The setup is complete. Place an order to go long here. Place an order to go short, a stop loss order here. That order is not filled. So we move this order down to here. And now we're going long here with a stop loss here. Where is our target? Twice the distance away. So our target, probably somewhere about here. To review a setup takes at least 45 minutes. No, it wouldn't even take 45 seconds, Michael. There'd be no universe where this would take 45 minutes. Honestly, the reason it looks hard is because it's your first day. Like this is something that comes so quickly. Everyone's. We'll get to the trend on, trend off rules. They're also pretty simple. So let's do one more short one. So we have a Bollinger Touch, but we break the Bollinger Touch, so we start again. So now we have a Bollinger Touch, element 1. We're waiting on element 2, a lower close, which we have. Leonard, it's extremely rare to not find a chart setup when you look, because we've got this great big list of things to go through and you just keep going through them until you find one. So it's extremely rare not to find a setup. It has happened. If we look at so in the last month, there was no trades at this is at 8 a.m. Eastern Standard Time. There was no trades at 8 a.m., no trades at 8 a.m., no trades at 8 a.m., no trades at 8 a.m. So it's happened 4 times between the 1st of May and the 16th of June. Does that make sense? So it does happen, but it just doesn't happen very much. So here we have a touch of the Bollinger, we have a lower close, we have a higher close. We place an order to go short and an order to go short is a bet that the market is going to drop if it drops below this line. It's done it. Our target is twice our risk. So if we're risking $100 from there to there, we're going for $200. And we're probably going to get our target at around here without working it out exactly. It doesn't have to be at 8 a.m. And you don't have to check. It works 24/7. It's 7 days a week. I don't know. I think we're about 2/3 of the way through. All right, guys. Okay, so if you haven't quite got that, don't stress. All the written rules, a bunch of examples, the black and white rules, they're all there for you, right? So the setups that we're using in our system, there are a set of black and white rules which capture this exact situation where one side has to admit that they're wrong. And you can see that even on today's data, they're not working every time, but they're working fairly well. And it's not random, it's not data mined. And what we're doing is exploiting our DNA level cognitive bias. It's been around since we sat around campfires in the African savannah. The edge is not going away. It is present at 90% of major market tops across all markets. It's a very, very handy thing to know. We've just learned the setup. So let's go through it one more time. We have 3 elements for a long. 1, touch of the Bollinger Band. 2, 1 or more higher closes without breaking the low of this bar. 3, 1 or more lower closes without breaking the low of the Bollinger Touch bar. Now the setup is complete. We place an order to go long if we break the high, and we do that with a stop order. And if the order is not filled, we just keep replacing it at the high until it is filled. Okay, download links for the rules are going to happen. So far, let's recap. What we've looked at is the funding rate data to show us whether we're betting long or whether we're betting short and which coin we're betting on. We've shown you the price action setup, which improves the odds of us having a winning trade. Now I want to show you multiple time frame confirmation confirming evidence. Now, one of the things that we know is that the strongest trends are present on multiple time frames. If it's trending on the daily, the weekly, and the monthly together, it's probably a very, very strong trend. It's a very well understood and validated edge. And we have 2 different types of confirming evidence. So we need, as well as the price action setup on the 15-minute, we need confirming evidence on the 30-minute and confirming evidence of the 60-minute. Those can be one of our 2 types, and you can mix and match. So let's look at the first type of evidence, which is a Bollinger Touch. What you need to understand is that the odds of a reversal from an extreme on the 15-minute chart are also stronger if we have a reversal on the 15-minute, on the 30-minute, and the 60-minute chart. So let me show you something. This one here, we saw that we have a long setup here. Do we have a Bollinger Touch on the 30-minute, which is this chart here? And do we have a Bollinger Touch on the 60-minute? Okay, post in the chat. Yeah, the Excel sheet's updated every day. So you can see that this setup, which kind of worked but kind of petered out, it wasn't it might have won, but it wasn't a particularly good setup. This one didn't have a Bollinger Touch, and it didn't have a Bollinger Touch. So we would not have taken this trade. This is not a valid trade. Now, if we go back to this one, see how the bar that makes the low also touches the Bollinger on the 30 and the Bollinger on the 60. So this is important. I need everyone to get this. Can you see how the Bollinger Touch on the 15-minute chart also touched the Bollinger on the 30 and the 60-minute chart? Can everyone see that? Okay, now, the thing that I want to point out is look at this trade. Look at how much better this one worked than this later one with no Bollinger Touch. See how this one was just a little blip? And this one was not like a nice, big, tradable move. Now, this is Bitcoin in the middle of the worst Bitcoin crash in history. So Bitcoin in the middle of the worst Bitcoin crash in history, we found a way to make money from Bitcoin while it's crashing, even while betting the opposite way than you would think. Has everyone got that? Now, if we look at some of these others, like here's one right here. We have a setup on the 15-minute. We have a touch of the Bollinger. We have a higher close. We have a lower close. On the 15-minute, we have a setup. On the 30-minute, we have a Bollinger Touch. On the 60-minute, we have a Bollinger Touch. And you can see this trade actually worked. It actually moved quite a distance from the thing, got us out at our target before it fell in. A Bollinger Touch is price touching the Bollinger Band, Devin. So the Bollinger Band is 2 standard deviations on a 20-period average. So it has to be on at the, so you can see the cursor is the same across all the charts. So if I put the cursor here, you can see it's also touching the Bollinger on the 30-minute here and the 60-minute here. Okay, now that's mean reversion. So if we only search for mean reversion setups, so setups that are betting against the trend, when the market actually does trend, we're going to get our ass handed to us. And so we need a solution to that situation. So for example, if I was putting a Bollinger Band on this, so if I put a Bollinger Band, this is a daily chart of Bitcoin. And if I was betting that, if I was only betting against the trend, that would be a very annoying thing to do now, to bet that it's going to reverse all the time. In fact, I'd lose a tremendous amount of money. Sometimes I have to bet that the trend is going to continue, like the trend has really, really continued here in Bitcoin lately. So how do we do that? We've got a really very elegant solution when you understand it fully. It's very elegant. So if we think about it, the 2 strongest edges in price action by far, and it's not even close. First of all, mean reversion off an extreme, like things have got too far out of whack and they're going to pull back. And the second edge is pull back in a trend. And you remember what our classical trend formation looks like. It looks like that stair step upwards, which we see right here. So these edges are the bread and butter of most professional traders. Like they do more than that, but this is probably 60, 70% of the total. So we've got a market that's going up. It makes too much money. People start banking profits. By banking profits, they drive the price down. It goes on sale. People who missed out on this first one jump back in because they want another shot at the title. It goes up too fast and people start banking profits and feeling great about themselves. And then all the guys who sold out too early, who are sitting on the sidelines wishing they were part of it, see it on sale and buy it, and then they drive it up, and then that makes too much money, and then people start selling out because they've made too much money, and then the dip buyers step in again. This is how it works. It works for really obvious reasons psychologically. It's something that's not going away because it's baked into how we feel as humans. So if we look at a chart of Bitcoin when it was actually doing its Bitcoin thing and going up, you can see that pullbacks in an uptrend are easy money. So when I designed this system, remember I designed it to work it needed to work in both bull, bear, and sideways markets. And in sideways markets, mean reversion, what we saw with the Bollinger Touch confirming evidence works like a magic trick. And in trending markets, trend pullbacks are highly, highly reliable. But by combining the two together, we have something that works in all market conditions. So it works in bull markets, it works in bear markets, it works in sideways markets. And this isn't just my opinion. So if we look at the real world results from 2,300 and something trades right now on Euro USD since 2009, you can see that through both bull, bear, sideways, and crashing markets, it's just like it's the same thing. It's just very steady all-weather performance. So if there's one thing that's the secret sauce to what I do as a trading system designer, I'm trying to combine mean reversion and trending setups together to get something that works all the time. So there's a problem with that. If you ask 10 different traders what's trending and what's not, you might get 10 different answers. So we need a mechanical rule set that tells us exactly whether we're trending or not. And let me teach you. Okay, let's pick a chart. So trending is a two-stage process. Let's start right at the beginning. Stage one, trending down is a two-stage process. Trending up is a two-stage process. It's the same thing. So the first stage is a touch of the Bollinger Band. We have a touch of the Bollinger Band here. The next thing that starts us trending is we need a single candle that makes both a lower low than we've had so far, and we can see our low here is 28,205.2, and our low here is 28,122. So this is a lower low than we've had so far, and at the same time, it has to make a lower close than we've had so far. So this is the lowest close, it's made a lower close. So we start trending from the close of this bar, this one here. Okay, we continue trending until, well, actually, let's just get that first. So here, trending up is a two-stage process. Touch of the upper Bollinger, single candle with a higher high and a higher close. We're trending up from here, and now we touch the lower Bollinger, step one. Step two, we have a single candle with a lower low and a lower close. So we're trending down from this candle, trending down, 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 trending down. Everyone got that so far? In the chat, you got that, or you need more examples? All right, now, trending starts, that's pretty easy. When does trending stop? That's slightly more complicated. Mark, thank you very much. That's a great thing. Mark says you can write Scalpier's trend, and you just type Scalpier's trend in TradingView, and he's built it for you. So that's very generous of you, Mark. Thank you very much, sir. I don't find it difficult to do. I'd rather, understand it. So that starts us trending. What stops us trending? What stops us trending is one of two things. Thing one is going 20 bars without making a new low for a downtrend or a new high for an uptrend. 20 bars does not include the bar touching the Bollinger. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. At the close of this bar, we stop trending, and now we're going sideways. And now we start trending again here, touch the step one, step two, lower low, lower close, and now we start trending again. So thing one that stops us trending is going 20 bars without going sideways. Thing two is touching the opposite Bollinger. So we touch the lower Bollinger, we start trending down, still trending down, still trending down, still trending down, still trending down. We touch this Bollinger, we stop trending. So let's get some more examples. Trending is a two-stage process. Stage one, we touch the upper Bollinger. Stage two, we have a single candle with a higher high and a higher close. We're trending up. We're trending up, we're trending up, we're trending up. When do we stop trending up? When one of two things happens. We touch the opposite Bollinger, we're stopped. Trending down is a two-stage process. We touch the lower Bollinger, and then step one, step two, we get a single candle with a lower low and a lower close. Now we're trending down. We've touched the lower Bollinger. What stops us trending down? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 19, 20 candles. We stop trending down. We touch the upper Bollinger, and then we have a single candle with a higher high and a higher close. And we're trending up again until we touch the opposite Bollinger and we stop. Okay, so let's recap. We're starting to put it all together here. So what we need to make this work one of our price action setups on the 15-minute chart, which you can see we have here, and we need either a downtrend with a pullback to the moving average. Now, this moving average is an 8-period exponential moving average. There's no magic about it. It's just about right. And so what we want is we want pullbacks in a downtrend or pullbacks in an uptrend. And so we have two types of confirming evidence. We have a Bollinger Touch, which is going to be most of the time, and we have trending, which is going to happen a minority of the time. Why? Because trends don't happen that often. Most markets statistically spend about 87% of the time going sideways. So most of the time, it's going to be a Bollinger Touch, which is easy to see. You just put your cursor over the bottom, and is it also touching here and here? Yes, it is. You can mix and match. It can be Bollinger on one and trend on the other, but that's not so common either. So we need a price action setup. We need confirming evidence on the 15-minute. We need confirming evidence on the 30, and then we're ready to go. We take the trade. Okay, let's look at one. Let's look at one where we've got trending confirming evidence. So here we touch the upper Bollinger. We have a step one. Element two, we have a lower close. Element three, we have a higher close. Do we, and I'm not sure if we do, let's check, have confirming evidence on the 30-minute chart? We don't have a Bollinger Touch. Are we trending down? We were trending down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. We are no longer trending down, so we don't have confirming evidence, and that is not a trade. Let's see if we can find. Oh, it's very few. Let's have a look. Hey, no, we don't have a setup in the last couple of days. But so what we're doing, let's recap one more time. Trend turning on is a two-step process. Step one is a touch of the Bollinger Band. Step two is a single candle making a higher high and a higher close. Now, the trend turns off in two ways. Way one is touching the opposite Bollinger Band. And way two is going 20 bars without making a new high in an uptrend or a new low in the downtrend. Okay, so let's recap where we're at so far, and then I'm going to go to the bathroom while I have the guys post some materials for you to go through in the chat. So step one, we choose which instrument to trade from the funding rate data list. I recommend you use my spreadsheet, but you don't have to. You could use coinglass.com, you could use your own broker, you could use ftx.com /funding. Step two, you look for an RTB or an RTC setup. The RTC rules are much simpler than the RTB rules, so I didn't cover it today. But it's the same thing. It's the same exact thing on the 15-minute chart. Step three, we look for confirming evidence, and it can be of either two types, the Bollinger Touch or the trending, on both the 30-minute and the 60-minute, and you can mix and match confirming evidence types. Step four is we size the trade correctly, and we take the trade for a 2-to-1 risk-reward ratio. And that's the last piece of the puzzle that we have to put it all together before you've got it all. Now, I'm just going to go to the bathroom, and then we'll come back and we'll talk about trade sizing from first principles, and then we'll give you some spreadsheets to do it all. Okay, I'll be back in a moment.
So just reading a couple of the comments, people saying that they're super lost or anything like that. That's totally cool. This might be the first time that you've ever seen this information, that you've ever heard any of these words, these terminologies, or even seen a slide. Thank you for giving us your focus. And if you continue to give Scott your focus, then he's going to keep opening up, peeling back the layers of the onion and showing you the big picture of what this system is about. And we've got more rules to give you, and those rules include videos as well. So just focus on Scott, and then when we finish, it'll be a case of you can watch the webinar replay, you can use the rules that we give you, and then it's just a case of practicing. Oh, here's Scott.
All right, guys. So the whole enchilada, here it is. You need a mean reversion set up on the 15-minute chart, either RTV or RTC. And you need confirming evidence, either trend or pullback, trend with pullback or Bollinger Touch on the 30-minute. And you need confirming evidence on the 60-minute. Your setup is complete. Now, for a long, and it's reversed for short, place an order to go long on a break of the bar high. And this is a stop order. Now, don't worry if you're new to trading, this won't make much sense to you, but there's a bunch of videos that'll all be becoming very clear once you watch them a few times. I promise you we'll give you everything you need to get you up and running. Like there's going to be no mysteries. It's just there's just too much to get through if I keep going over everything. So the target is 2 times the distance from your entry point to the stop loss. We call that your risk or your R. Professional traders think in terms of R. So therefore, for every $1 you risk if you lose, you get back $2 if you win. And it's easier if I just demonstrate it. So we're going to talk about position sizing first. So if our entry is here at 3,324 and our stop loss is at 3267.9, our target is twice the distance from here to here. That's how it works. So obviously in the real world, we built a spreadsheet to spit out position size, but I want you to understand how to calculate position size from first principles. So Our distance from the entry to the stop loss is $56.60. That means that for every one ETH, this one was an ETH trade, that we buy, we're risking $56.60. But let's say you don't want to risk $56.60. Let's say you want to risk $500. How many ETH do you have to buy to risk $500? You have to buy $500 divided by 56.6. So you have to buy 8.83 ETH. And that is worth 8.83 times your entry price, which is here, of $3,324.5. So you have to buy $29,368,000 worth of ETH. Now, these brokers will happily give you 100-to-1 leverage. They'll happily see you use that, but you should never be using 100-to-1 leverage. The average leverage that I use is between 2 and 3 to 1 and never exceeds 5 to 1. So you're not going super high leverage, and we keep the leverage so low that you never even actually have to check the leverage. So the formula is the number of coins equals your desired risk in dollars divided by your risk per coin. So in this instance, we're risking $29,368 worth of ETH to either make $1,000 or lose $500. Now, the big question is, what size account do you need? So you could take this trade with $2,000 or $3,000, but you shouldn't, in my view. In my view, that's far too aggressive. If you want to do that, you would be far better trading at $200 per trade until you've built your account up, and then you can do it very safely, and it's not going to mess with your head if you have a losing trade. The big danger is that when a losing trade takes too much out of our account, we become scared money and we start trading like noodle heads. These should all be very like, I don't care if I lose. It's nice that I win, but it's not making my whole day. It's like you shouldn't feel like bragging about it on Facebook when you have a win, and you shouldn't feel like slitting your wrists when you lose. It should just be like another day at the races. Honestly, it should just be it should have the character of work as opposed to play. So what I suggest to be conservative, and you don't have to be as conservative as me, I'm very conservative, is a minimum of $10,000 into an account to risk this $500 trade. And most people wouldn't be as conservative as me, but that would give you an effective leverage ratio of 2.9 to 1. And this is far less than the 100-to-1 leverage that the brokers want you to have. So before we do this, let me post it here. Link. Okay, let me change that to anyone in the link, anyone can view. And let me post this in the chat. So there's a document with a bunch of position sizing examples and exactly how to do it from first principles. And this is all the rest of the stuff that I've told them to give you, and probably some more stuff aside from that. So I hope that I'm following through on my promise to give you everything and not hold everything back. But the question remains, like, how do you turn this new knowledge that you now possess? How do you turn this into a viable trading business? How do you turn it into a $500 to $2,000 side hustle? How do you go from theory to practice? And it's probably been obvious that I've got something for sale, and it's going to save you a lot of time, a lot of effort. It's going to keep you from making a bunch of mistakes that are probably going to cost you money. But I want to stress that you don't need it. You don't need to. There's not one bit of information that you haven't got right now. You can do everything with what you've got right now. You'll get the recording, you'll get the slides. They're all coming out by email. And if you want me to show you how I can get you up and running faster with my help, I'll show you exactly what I do with my community members. Michael, you're going to have to know your customer identification. You know, we're in the year 2022. The idea that you can be an anonymous person and make money without paying tax on it, like fucking grow up, man. Like you're just going to have to pay your taxes on the money you make. and you're going to have to tell your broker who you really are. That's just the way it is. It's 2022. All right. So if you've tried this and failed at it before, there's really only three possible reasons that could happen. And there's only three. First of all, you either had a crappy system or you had no system at all. And there's a lot of crappy systems out there and a lot of people trading with no system at all. So if you've tried trading or investing and you've tried it with like discretionary chart patterns or stupid systems, there's probably your reason right there. The second reason is you had a good system, but you didn't take action. And some of you are going to be in that situation here. You've watched it, you've thought that was interesting, I could make some money. Yeah, I'll do that when I get some time. And a couple of weeks go back and you can't remember it all. And then you fail to take action and you're like, oh, forget about it, too hard. And the third thing that can happen is you're really serious and you want to do this and you can see that there's money to be made, but you stall out when you hit challenges. That's a tragedy. And what I'm here to tell you is that having a mentor solves all three of these problems. Now, trading in particular, there's a lot of crappy mentors out there. How do you pick one? And it's the sad and shameful truth that the vast majority of people teaching trading on the internet actually failed at trading before they decided they were going to teach. And I learned off some of those people from time to time. I learned off some very good people, but I ran into my share of those assholes as well. So what you want is someone who is doing the exact same type of trading that you want to do. You want someone who teaches a style of trading that it's possible to be good at quickly. So people who teach discretionary trading, it takes decades to get good, to be any good. You want someone who has a track record of success. In other words, that they aren't a fake themselves. And you can tell if someone's a fake because they tell their success story as a story, but your return is not a story, it's a fucking number. My return is a number. I take X number of trades, this percentage of them won, and I made this amount of money. It's not a story like I've been doing this for 20 years and so said I'm great. And I was featured in this article and I won that competition. That is not legit. What's legit is a number. Anything other than a number is highly, highly suspicious. The last thing that you want is someone who has a track record of helping other people be successful. You know, there's some people who are much better at trading than me, but zero chance that they replicate themselves. So, I have made it look a bit easier than it is. Like, I haven't lied. You now know the whole system. There's no extra rules. There's no fine print, nothing extra you need to make this work. But turning this into a real profitable trading business that prints money every week is still quite a lot of work. Now, I want you to consider the effect of making just one mistake every 10 trades. You probably wouldn't even notice, but it will drastically affect your profitability. It will take between 35 and 45% of profits out, just making one mistake. And here's the magic sauce, the secret sauce that I can offer you. And I want to be clear that you don't need it. It's just a shortcut, and it's a big shortcut, but it's still just a shortcut. And the power move that we all use is a thing we call the baseline. And the baseline is a completely accurate set of records that we keep at 8 a.m. Eastern Standard Time. It's not because that time is good or you have to do it at that time. It's simply because that is a time that's viable for everyone, for our European customers, our Australian customers, our Asian customers, and our American customers. That's the only time that really all of us can get to. So someone in our company sits down every day and we log the trades at that time. And we learn by, you don't cheat first, you don't look first. You do this exact same thing and you test yourself against the answer. And we turn it into a game. It's gamification. And we all know that gamification is the most efficient way to learn anything. And at first, you won't be very good at all. Your trades are going to look nothing like the correct trades. But the act of saying, hang on, I took this trade and that trade, and the correct trades are this trade and that trade, why? And trying to figure it out yourself, and then asking the mentor that we assign you or asking inside our community, hey, why was it this and not that? Very, very quickly, you're going to build up a database of mental knowledge of what's right and what's wrong. And the gamification is really the secret sauce. And the gamification of it and having a community of people where we are completely intolerant of failure. Anything other than excellence in our community is unacceptable. We are fucking pro traders. We are elite level traders, and we do not accept bullshit. We do not accept near enough is good enough. We accept only correct trading. It's black and white. It's right or wrong. If you got it wrong, then you need to figure out why you got it wrong. That's the standard that I insist we enforce. So learning the system into a game lets you know exactly when you're ready to trade for real money. Because if you're not getting it right, you can't trade for real money because you're going to lose the money. And trading for real money, but just a very small amount, is much better than paper trading. So what we do, so paper trading is like learning to I say it's like learning to fuck by watching porn. You know, you might get the mechanics right, but you kind of miss the whole point. So what we do is we start by risking an amount that you notice that doesn't hurt you to lose. And so where I suggest people start is think of a cost for a lunch for two at a restaurant that you would enjoy going to. That's not like a special occasion meal, like just a meal that you enjoy going to. So for most people, that's between $20 and $200, depending on how rich they are. Like if you're a multimillionaire, like $20 probably isn't enough. But $200, I don't care how rich you are, you're not walking around throwing $200 away everywhere you go. It's got to touch the sides, but not be more than that. So with us, you get assigned a mentor and we track your mistakes obsessively. And this is very important. We don't want to be focused on outcome, how much money we're making. We want to be focused on process, how many mistakes you're making. How many mistakes you're making is everything. And this stage is completely about reducing mistakes to an acceptable level. What is an acceptable level? An acceptable level for professional trading is 1 mistake in 20 trades. And an exceptional level is what I call only rare mistakes. Only rare mistakes is you might make 1, maybe 2 a month. And when you are doing an acceptable level of mistakes, you get to level up in size. And the way that I want to explain it is, if I put a plank down on the ground and tell you to walk on it, everyone can do it. If I put that plank on 2 bricks, you can all probably still do it, but you probably can't run across it. If I put it 1 meter high, you can probably do it, but you're paying close attention. But if I put that plank between 2 20-story buildings, it's going to freak you out. So we want to gradually work our way up to a level where we're not going to be freaked out. And we want to stop well before we get freaked out, because this is a job. You know, none of you want a job where you're absolutely terrified, you know, expecting financial ruin, which feels terrible anytime you might make a mistake. You just want a job where you clock on and clock off like Fred Flintstone. That's where I suggest you keep it. For me, that's $1,000 a trade. I can give a fuck about $1,000. Like, you know, I can lose 10 in a row and just not care. So if you aren't doing better than 1 mistake in 20 trades, we need your mentor to work really closely with you to figure out what's causing mistakes. And we have a whole process about that. And as you trade well at the increased size, you keep increasing size until you target. And I don't recommend raising size forever. And the reason for that is that most traders get mental problems if they're winning or losing 10 grand in a day. And I personally stop at $1,000 per trade risk. And that gives me an average of $1,000 a day profit in the long term. And that might be boring to some of you. That might not be exciting. It's not sexy. It's not to the moon, but it doesn't upset me when I lose. And just as importantly, it doesn't excite me when I win. So what I'd like to offer you is I would be thrilled to be your mentor. You know, I've got a big track record of taking people to be as good or better than me. And I take you from beginner to full mastery in a 12-week sprint. And if you are interested, the spots are limited, so I suggest you start typing out as soon as possible. There's only so many people I can, you know, personally interact with. And it's at cryptosalary.com/application. I'm sure Ian will be posting that in the chat. And the next point I want to make is that it takes practice. This is not something that you can be good at day one. It's going to take at least 2 weeks before you even just like driving a car when you first started driving the stick shift. Like at first you like check mirror indicator on, left pedal, right pedal, whatever. And then, it's not long before you don't even think about that stuff anymore. It takes time. Anything worth doing takes time to master. And this is really worth doing because it's an income that you can earn forever. So I'm going to talk to you about a tale of John and Jerry. So this is more for the people who have done some trading already, but this is more common than you'd think. So John has 50 grand in a portfolio of Bitcoin, Ethereum, some altcoins, and he wants to trade this system to pay his mortgage and his bills in the meantime. So he takes just $5,000 out of his profits and he trades crypto perp futures with it. He uses crypto margins, so his capital is still in Bitcoin. If Bitcoin moons, he still gets all that profit. And John follows my advice. He starts off risking just $20 per trade, win or lose. John's getting a lot of valuable experience. John's really surprised how much it pisses him off to lose $20 a few times in a row. And after a month or so, John is objectively trading at a professional level. And after discussion, he decides to raise his bet size to his target of $250 per trade. And he can afford way more. He's got 50 grand in his account, but he's a conservative and sensible guy who's in it for the long term. He's trying to become a professional trader, not trying to make a shit ton of money in day one. So $250 is just 0.5% of his account balance. He takes the 2 trades per day, 60 trades per month, which is about average. So John takes 60 trades per month, risking $250 per trade. And sometimes it does a little better than average. Sometimes it does a little worse. In the period John starts, it does a little bit worse than average, but he's still making an average of $125 per trade. His expected return is 0.5 times 250 times 60. So he's making $7,500 per month off his $5,000 that he allocated to this. And those are very conservative numbers. Plenty of guys beat that in our group. Now, John could easily do better. He could do his better in a couple of ways. He could compound his amount per trade instead of using a fixed value. This actually nearly doubles things, but you have to do the maths every time. I can do the maths in my head, which is why I like risking $1,000 per trade, because it makes it really easy to do the maths in my head. If he reloads trades, and we teach this in our group once they're finished, so if the trade wins or loses, you can just reload and take another one. He can take an extra 30 trades per month, and I teach this in our group. And those extra 30 trades a month will make an extra 3,750 on top of the 7,500, making a total of 11,250. And these are conservative numbers. These are way lower than I'm currently getting, way lower than many people are getting. And this is not taking into account the extra 100 to 300% per annum you get from the positive carry itself. And you just consider that a bonus. So the bottom line is that John is earning a fantastic salary. He's taken very little risk. He's setting himself up to earn big money for a long time to come. And when he's ready to raise his bet size, the sky's the limit, because he was an expert first. He was focused on process and not results. Skilled traders with an excellent system make money. This is an excellent system. If you become a skilled trader, you will make money. Now, John has a friend called Jerry, and Jerry thinks he's got nothing to learn. And you see this guy all the fucking time. It's so frustrating. I can tell, because they always tell me how they've got 20 years of experience, forgetting, of course, that your record is not a story about how many years you've been doing it. It's a number. There's plenty of taxi drivers who've been driving for 20 years who suck behind the wheel. Of course, Jerry hasn't made any money in 20 years, but he's on a bunch of Facebook groups and forums, and he's way better than the guys on there, which is also very common, because the level on those places is incredibly low. So Jerry is pretty sure it's just the Fed, the rigged markets that have stopped him hitting it big. And Jerry's a dumbass, but he's not that dumb. So he recognizes this system is a great opportunity, but he doesn't want my help because he's been doing it 20 years. John starts slow. And it's 3 weeks in before John takes his first trade, and Jerry's laughing at him. He took his first trade the first day. He's like, "You'll get it eventually, noob." And John, when he does start, is only risking $20 per trade, and Jerry calls him a pussy. And John's only made $200, but Jerry's pretty damn pleased with himself. Jerry has big balls, and he risks $1,000 per trade right off the bat. And he's made $15,000 profit after 60 trades, risking $1,000 per trade. He's playing and winning. He thinks he's pretty slick. He's got 15 grand profit. But that was only an average of $250 per trade. So he's making half what he should be making per trade. But he doesn't think about that. Doesn't think about it. He's just concentrating on the outcome and not the process. Totally wrong thing to do. And Jerry doesn't track his mistakes. So he doesn't even keep proper records, much less take time to review them. Jerry's a fucking noodlehead. So after such a great first month, and he was up $15,000, remember, he raises his position size to $3,000 per trade, expecting he's going to make $45,000. So Jerry, after raising his position size, he still only makes $15,000 the next month, risking $3,000 per trade. Why? Because he's making plenty of mistakes. His mistakes are widening his profits. But Jerry doesn't care, because this is the first time in Jerry's life that he's actually winning at trading. But John is making nearly as much money as Jerry by now, but he's taking under 1/10 the risk. Jerry's taking a big risk to make a small amount of money. John's taking a tiny risk to make a big amount of money. John gets better every month, and Jerry gets worse every month. John's going to do this for a decade through bull and bear markets. John's got a real thing here. And Jerry's going to give up after 6 months. He'll eventually fuck it up, and he's going to blame the system. And John pays his house off. John is a hero to his family, and that's something that I've always wanted to be, and it's something that this system has given me. And Jerry starts trading like a dickhead and blows up, and he tears up 6 months of profits in one go. And Jerry misses the point. The point is to be the best trader you possibly can be for a given amount of risk. The point is not to make the most money. The point is to make the most money with zero chance of fucking it up. And Jerry doesn't even realize that he could blow up at any time, and a stretch of trading on tilt or the market going down for a few months, this could put all his profits in danger, but Jerry's too stupid to ask for help. And in 3 months, John's a far better trader than Jerry is after 20 years. Nothing could blow John up now. And Jerry is a few bad months away from losing all his profits. He needs to stay lucky. But when John raises his bet size, he's now getting the maximum profit from his trading. So inside 6 months, John is comfortably trading $2,000 per trade. He still makes occasional mistakes. He still makes 1 to 2 a month. So he earns on average 60 grand a month, less around 2,500 in trading fees and around 3,000 per month in mistakes. And he earns about 4,000 a month in positive carry. So he's making about 58.5 grand a month because of a little delayed gratification. And you, right now, you are now armed with a world-class trading system. That is for real. If you take a few months to become an expert trader with a world-class trading system, you will make an endless stream of profits for a long time. So Jerry could probably still have a happy ending here. And the system's so powerful that even a muppet like Jerry is probably going to make great money. But it's just stupid not to take the time to build yourself up to a larger size slowly, to track your mistakes, to immerse yourself in a community of people doing exactly the same thing as you, to hold yourself accountable. And it's idiotic not to have a coach when there's so much on the line. And if Tiger Woods has a golf coach, you should have a trading coach. And I'd like to work with you to implement everything we've talked about today. What I can offer you is certainty, real certainty. Like if you think the system sounds like it can print money, it is. I can make absolutely 100% certain that you earn every dollar that's on offer. I will stop you from making all the usual beginner mistakes. I'll stop you from getting off track. I'll stop you from any crazy ideas you have about improving the system. And I'll save you months or years of trial and error. And I can turn you into me, and I know I can do that because I've done it before. I've done it more times than I can count. Those of you on the webinar now from our community will know that there's many people trading our systems who are at least as good as me, and the best of them are our coaches. Like Maurizio's a way better trader than me now. Paul Clark, way better trader than me. I don't have to think hard to come up with 5 or so. Sherry, was way better than me 2 years ago. I don't have to think hard to come up with 5 that are better than me. Sherry was trading at a pro level in 5 weeks and is way better than me now. Ralph, the hedge fund guy, he was always better than me, and he's breathtaking now. He's poetry in motion. Chris Wright is incredible at this system, far better than me. Simon Spall, who most of you know is a very solid pro. Paul Clark's going to make millions. Lenny Keys took my system and improved it a lot and fully automated it. I like that. Peter van der Oost came up with the original concept for the system in 2019, and I fleshed it out with him. Maurizio's a wizard and his returns are amazing. And Richard Walker, I would trust to invest my own money with. and Thomas DuForest, who's a brilliant trader and algo trader too, and Mark Stockwell, Nicholas V, John Garcia, too many others to count, have truly mastered it, not just done okay, they mastered it. And my point is that I don't have students, I have community members that I collaborate with, and we share ideas, we hold each other accountable, we're transparent with results, you will always see my real results, and we support each other through the ups and downs of trading life. And I'm a pretty good trader, I'm okay, all right. But my zone of genius is designing trading systems, and I'm legit one of the best in the world at that. And that's not bragging, that's just a fact. And if you'd like to be one of the lucky few who work personally with me over a 12-week sprint to authentic mastery, cryptosallaryincubator.com/application. And if you aren't a good fit, we also have a more comprehensive video course, which you don't need, but I'm going to show it to you now. So I've got some stuff about the history of the system and how we worked it up, setting up your charts using TradingView, adding the hammer and shooting star indicator, which is kind of handy, sorting future perpetual funding rate data. We've got the seminal academic paper on carry, which kind of proves that this whole thing works. It's like a big academic peer-reviewed paper thing. We talk a lot about the perpetual futures landscape for USA customers who have legal issues. There's plenty of options is the bottom line. We talk about choosing broker, understanding fees, coin margin versus cash margin. We talk about reloading and reloading rules. We do position sizing, mistakes and affected return. And we talk about the difference between fixed fractional position sizing, where you risk 1% of your account, versus fixed dollar position sizing, where you're risking $1,000 or $500 per trade. And I talk about why I use fixed position sizing, even though it's not optimal and I make less money because I can do the math in my head. We talk about calculating position size, R value. And we talk a lot about mistakes, acceptable mistake rates, how the actual process, the nuts and bolts of how we remove mistakes. And we've got a bunch of checklists and checklist manifesto and how we handle mistakes in real time. The rules, which you've all got today, definitive rules, Bollinger Touch, confirming evidence, choosing which coin to trade. There's a system overview flow chart, retest concept rules, these you get today. And I've got a lot about a detailed, a deeper understanding of positive carry and perpetual futures funding rate works. And I talk about the differences between these funding rate mechanisms across exchanges. So if that sounds like stuff that you need, just talk to one of the sales team about that. But what you really need to do is to fill out this cryptosallaryincubator.com/application. And I'm going to post that in the chat right now. And that's about all, guys. It's been almost 2 hours. Yes, the replays will all be shared via email, and you'll get the slides as well. Let me give you the slides now. Okay, the slides are being uploaded. Pierre, yes, I did complete Van Tharp's Super Trader program before he died recently. I was one of his students back in 2012, actually, through 15. Yeah, Van was a very valuable mentor for me. Right, guys. So showing you, if this all sounds like it's a good fit for you, make the application. If you aren't a good fit, you can get the digital course, but honestly, you don't need it. Like, I wouldn't actually recommend you buying it. Like, everything that I've given you today is enough, especially with the recordings. You don't need it. I'm not telling you to pay me any money unless you want to work with me. And I'd love to work with you. It's very reasonably priced. Yeah, and I just want to thank you from my heart for your time and attention today. It's been 2 hours. I know this is complicated stuff, and you know, you have everything you need.
That's really fantastic, Scott. Thank you very much.
It's my absolute pleasure, brother.
Yeah, so just for the last people on the chat, then things will be going out via email. The webinar recording will be available on Scott's YouTube channel.
And we'll also send it out by email.
Yeah, everything will be up there. And the links for the entire course have been posted. Sorry, not the entire course, all the rules that Scott went through today. I'll just drop that one more time, and then we'll probably wrap up for the day.
Yeah, and what else can I do? Yeah, I'll get someone to add the recording of that video to the Google Drive, so people can download a copy, so they don't have to worry about it being on YouTube forever. You know, I just want you guys to have what you need. You know, I'm not out. You know, if someone wants to work with me, honestly, that's the best money you could ever spend, because I'm gonna save you. You know, one string of mistakes is going to cost you more than I'm going to charge you. So I believe that I'm offering really good value, but you don't need it. You might just be kind of interested in this if you like. If you're not sure you want to do it, don't pay me any money at all. But if you are interested in it, I would recommend that you get onto that application fairly quickly, because it's the spaces fill up really quick. Matt G, are there any discretionary rules which improve results in the current hostile market? Nope. I went through it with the coaches yesterday. The coaches were like, we had this call, and I think they posted it. They're like, oh, Scott, we're really concerned about this green Satoshi token. It's a shit coin, and the market's crashing, and the system keeps telling us to go long. And we went through the last 10 trades, and the system rules kept us out of this. Out of the last 10 trades, it didn't lose any money. So even the absolute worst, egregious, complete scam shitcoin, while the market's crashing, going long only, the system rules didn't lose any money. So really, do you want to confuse it on top of that with discretionary rules? Discretionary rules suck. It's just too hard, right? Like, really. Okay, guys. Thank you so much.
Thank you, Scott. Thanks, everyone. Cheerio.
Bye, everyone.